Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance that is now turned support. Now, as the market is testing this previous resistance turned support, we could expect a potential rejection to the upside away from this area. We can also notice how in the past, every single time that the market tested its zone, it rejected it to the upside quite aggressively. So we could expect this same reaction away from the zone as already happened in the past in these occasions. So from a monthly perspective, everything looks quite bullish. Now, if we look deeper at the most recent price action, what we can also notice is that this previous monthly resistance turn support is actually a confluence of support, because from a pattern standpoint, we can see how we have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area, creating a confluence of support inside of the zone from which we could expect a potential rejection to the upside. Going down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can see how all this area is quite important structure. This zone is in fact the previous level of resistance from which all these rejections to the downside were created, which now that the market has broken it to the upside is turned support here. So as the market is testing this previous resistance turned support, we could expect a potential rejection to the upside away from this area. So here in the weekly time frame, everything looks very bullish. Going down on the daily, what do we see? Now, from a daily standpoint, I did speak about GBPUSD when the market was below this resistance and explained all the reasons for which until the market would remain below this resistance, it could easily continue lower. Only if we got a break above resistance, only at that point we could expect more bullish continuation. However, the market did in fact remain below the resistance and in fact continued lower. However, in creating the move to the downside, it also printed new structure. In fact, in creating this move to the downside, we had the creation of this M pattern. Now, what we know is that after the creation of an M pattern, what we would expect is for the market to create a potential rejection to the upside. Specifically, what we would expect is a move higher and completion of this M pattern at the previous support turned resistance. So here in the daily time frame, we could expect a potential rejection to the upside for the completion of this M pattern at the neckline, which is this previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, we can see how with the last reports, net positions have been increased. We went from having 47k net positions up to 59.1k net positions. So a huge increase of the net positions, making the GBPUSD stronger with 7,500 longs longs added with the last report and almost 600 shorts getting closed. Now, this makes the pound quite strong, but what you have to do is keep in mind that if you're looking at the data for the pound, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. So if we're looking at the data for the GBP, we're actually already looking at what institutions are doing on GBPUSD. And we can clearly see how institutions are currently adding longs and closing shorts, with currently 98,000 longs compared to only 38,000 shorts. So clearly institutions expect GBPUSD to get stronger. And combine this with the fact that we have already seen that the monthly, weekly, and daily time frames all look quite bullish, with the daily time frame also having this M pattern, we have a high probability of seeing a potential rejection to the upside, because this support area that we have identified previously, especially on the monthly time frame, shows how this is a good area inside of which institutions could be adding even more longs, further increasing the probabilities of a potential rejection to the upside. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll over, you will see that at the moment there is still time to join, even though it is about to expire. And directly from here, there is the button to join in order to gain automatically access to the email and password that you will create during the checkout process. So definitely looking forward to have you on board. Go and check it out at transparentfxtrading.com as the promotion is about to expire in just a few days. And I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.